Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, August 5th, 2008. Well, what a rally today, guys, and it really started from the opening bell today as the indexes all were gapped up as oil was slightly lower again on the day, and it was just off to the races, even up to that Fed meeting when the Fed released their statement on FOMC policy, keeping rates unchanged. The market still roared higher into the close, continuing their squeeze. Now, those of you that watched the video yesterday noted that we had talked about a possible rally today, and that did come to fruition. And the interesting thing, as I mentioned yesterday in the video, is that we had multiple indicators indicating a possible big rally today, but it wasn't all across the board. And you guys know us, we look for 85 to 90% of these indicators to be pointing all in the same direction, and that's when we talk about a major move. Yesterday, of the 7 indicators we calculate, and this is based on price pattern time calculations, psychology calculations, and our multiple other calculations, we had 5 of 7 going into today for a rally. So it was upwards of probably like 75%, maybe even, close to 80%, but it wasn't our 85 to 90% we like to see for a definite rally. But either way, it was obviously enough of a percentage because sure enough, the indicators here, which was a majority of 5 of 7 here, off to the races. Monstrous rally in the markets across the board. Short squeeze. Volume was decent today. That was okay. But again, we'll go over some of those indicators today that we saw yesterday. I'm not going to obviously go through the major calculations as that's somewhat proprietary, but nonetheless, you can always do consulting with us if you're a large player out there or a hedge fund or anything like that, and we can help you alongside sitting by you while we do these calculations for various stocks and indexes and commodities. In any case, let's get right into it today, guys. So, what happened today? We started off the day up a little bit. Futures were up about 10 points, 8 points starting on the day. We dipped down a little bit, but then just pretty much held that and started to rally as oil was lower for the majority of the day. Oil has broken down here again after a nice bear flag pattern, which we can show right away. Let's go right to the USO chart, and we're going to flip across to the daily chart. Here's where we talked about a bounce on oil. You got a little bit of that bounce, and it was a bear flag situation. You see the 20 moving average crossing the 50 moving average to the downside. That's a negative. It also forces pressure down here, and you see the breakdown on oil. Now, the significant thing on this oil chart right now is 2 key support lines we're looking at. Number 1, look at this gap window right here. You have a gap in the chart. This first support is right from the bottom of that, and look at where we went to today. How perfect is that? I mean, can you call it any better by just some chart analysis basics? And this is basic, guys. I mean, this is no genius, doesn't take that. Second support will be right here on oil, and this will be very significant. All right, this gap close or this gap fill will be very significant. That's around 93.50 to 93.75 area. And then obviously you'll have good support down here. These are the 2 biggest supports, this one and this one. It's possible you get a little bounce off any of these. I mean, that's up in the air. It's starting to point to a possible bounce. Would I suggest waiting to see if it hits this or this? Yeah, of course. The lower you get it, obviously, the better, and you're trying to catch what's called a falling knife here. And we always talk in the chat room, and by the way, great chat room today, a lot of fun as we awaited the Fed FOMC statement today. We talk about catching a falling knife, how it oftentimes cuts you on the way down, and that's just to signify how you have to be careful because it's very tough to catch a knife as it falls. And that's a perfect example here as, if you picked it up right when we talked about a possible bounce, maybe you scalped a little bit, but was it worth the risk for this a little bit of upside? Maybe not. It's all about risk-reward in this game that we play, which is as traders, swing traders, investors, it's all the same. It's all the same. We're all just looking at different time frames. The day trader looks at the intraday. A swing trader may look at the daily chart. An investor may look at the weekly or the monthly chart to get a broader range of where the stock is going or the index is going over the next 6 to 12 months. Okay, that's all it is. That's all you're doing right there. So that's why the webinar obviously is so beneficial to all groups of investors. In any case, nonetheless, keep in mind you have these different support lines on the USO. On the upside, the resistance will obviously be this high, which will coincide with the 20 moving averages. The 20 moving average creeps down over the next couple days right in here, and then obviously the resistance will move down with the 20 moving average. Now let's go back to the ES and talk a little bit about this. What was telling us there were possibility of rally? Number 1, we pointed out volume declining here over the pullback. All right. We also talked about the 20 moving average support being hit yesterday. That's a one signal. Obviously, you're also talking about support line here, and I didn't draw this one in yesterday, but this is obviously a nice one to look at. You can draw it from the lows of the charts. Notice the support line hits here. You draw it from the bottom to the bottom, and where did we hit yesterday? On the bottom, and then you got that blast off. I'll do it on the SPY so we can even see a little better, as this is a perfect chart to do it on. Notice this, guys. Take it from the bottoms to the lows right here, and we came right into that support line. So these are just a few of the basic indicators we were looking at. Obviously, look at the volume. Last 3 days on the pullback. Today, volume bigger, obviously, on the rally. That's another bullish sign. Now, what are we talking about on this market? Well, you have a resistance point right here, which we're right into now. So now what we're going to look for, and obviously you guys know we've been calling for continued move up, but the question is, will it happen tomorrow, or do we need a little bit of time to digest this move today? And that we'll have to see over the coming days. One thing you do know is that the market's at resistance here, and this is what happens. Basically, you either break out either tomorrow, in which case you're moving to the 50 moving average, which is right here. Let me erase that line. 50 moving average will be a lot of resistance, but I think we are going there ultimately, and in the MoneyStocks.com calculations show that we should go there. And then at that point, then we watch the downside. Once we hit that, then we might have to reverse our position and our stance and possibly look towards the downside. But that's in the future. Let's focus on now. Okay, so first resistance, here's the 20. I hope everyone can see it. If not, let me draw a line over it. There's the 20 coming down right here into this resistance. So downside support right here, upside resistance right here. Near-term upside resistance is right here at the triple top now, where you're going to have some. But it's very possible we uptick to this level over the next few days. All right, so those are just some basic indicators we were looking at, and that's really no-brainer stuff. I mean, that's 101 investing and technical analysis 101. What we would say is the psychological indicators were somewhat indicating, but not as strong, while the time, price, and pattern, the price pattern and time indicators were extremely strong. I mean, this is pattern number one. This is pattern of a pullback right into here. Obviously, there's a count here in the bars and a calculation based on how many bars that we've come up with that has been almost dead-on accurate. As another calculation, obviously, and there's a price calculation as well involved. In any case, nonetheless, beautiful move. Nasdaq had a soaring day, and just to go over what the indexes did overall today, Nasdaq was up 64 and a quarter points, or 2.81%. The Dow was up 331 points, or almost 3%. And the S&P was up 36 or 2.87%. So just a huge move across the board on these indexes. And you can see with the NASDAQ, you're basically forming a channel now. And I want to draw this in. We just flipped to the NASDAQ chart, and I want to just draw this in. And you can see the channel you're in right now. And the next resistance point, again, is the 50 moving average. And we're pretty close to that. So, you know, you're gonna hit some resistance very soon on this NASDAQ on the move up. But as long as we stay in this channel, this is what you're gonna watch for. You're gonna watch the downside of the channel. If we should break below down here, watch for a move back to a double bottom over the next couple weeks, which would be down to this level. And if we break above the 50 moving average, well, next resistance could be as high as this point, but obviously we'll calculate that as we go. Just on the chart, I'm just looking at, you have a little gap right here in the chart, and where my cursor is right here. And you guys can see that very accurately here. Alright, right in here, so obviously some resistance. And then look at that, and how funny is that? So here's the 50 moving average, and I just drew the gap window, which matches right up to that. So that's that's like what we call a double resistance point on the market. And a gap fill would be a little bit of a move up, and it's very possible you get just such a small little move there. That could be a move up to fill that point. So there's a lot of key interesting things in this chart right now, on the NASDAQ, on the S&P, on the Dow. Nonetheless, a beautiful rally today, and it does look like we may pull back, we may consolidate off of that, but it does look like either tomorrow or in the next few days to week, we should continue up and hit that 50 moving average in our opinion. Okay? Technology very strong today. Cisco had earnings after the bell, and we'll touch on that one. It's not a huge market maker, but we can touch on Cisco here, and I'll bring the level 2 in focus. Let me bring that over so we can all view what's going on. And right now it's 5:07 p.m. Eastern Time, and today Cisco closed up 66 cents at 22.65. After hours, trading upwards of about I don't know, that's about 80 cents, 75, 80 cents here at 23.40. So decent earnings coming out of Cisco, better than expectations. Obviously, as expectations were beaten, the stock would trade up on that, and that is what we're talking about there. So that should give a little bit of, Cisco doesn't affect the market like Apple or Google, but it's still a decent player out there, and we should be watching that for a little bit of tech strength in the market tomorrow, possibly, and we'll see. So again, Obviously, look for consolidation. We always talk after a big move, maybe consolidation, maybe another little up move into that 50 moving average on the NASDAQ, as it's not that much higher. You can see it right here. So it's basically there, and it wouldn't shock us to see us hit that tomorrow. And maybe at that point, we'll see a little bit of a pullback. All I can say is the XLF. What a chart pattern on this XLF. And let's type that in as we enter this video. All you that have been taking the webinar with us and know chart patterns and the time analysis and so forth, count the bars up here. Obviously, look at the bull flag pattern right here underneath the 50, and look at the little break up today on that. Beautiful chart pattern. I mean, it doesn't get any better than this. We will continue to watch this XLF as the financials are not out of the woods. This market is not out of the woods. You guys know we play for the 1 to 2 week time frames. So if we're going to rally in the next week or two, we call it, and that's what we've been talking about. That's what we called for today on the 5 to 7 chance of a rate of a nice boost in this market. We will change our stance again, so obviously you're just trying to trade with the trend, the near-term trend, and then you can do your own thing, and obviously we'll do our best to help you. Have a wonderful day. Join the chat room, guys. It is awesome. Join the Swing Trade Alerts. We'll talk to you tomorrow. Take care.